On a gray Thursday morning in late autumn, just after 9 o'clock, Daniel Ortiz stood on the cracked concrete path leading up to his small two-bedroom house in a quiet corner of Dallas, and felt his stomach drop as the yellow paper on his front door flapped in the wind like a flag announcing defeat. The bold black letters read, "Notice to vacate." And even though the words were printed in the dry legal language of banks and courts, what he heard in his head was much simpler. You are losing your home. Inside, his phone vibrated again and again on the kitchen counter, a relentless chorus of messages he had been trying not to look at for days now, each notification a reminder that the loan payment had failed, that the credit card had reached its limit, that the overdraft had been exceeded, that another late fee had been added to a balance that no longer made sense in his mind because the numbers were so large they felt like fiction. Only 3 months earlier, Daniel had believed he was finally breaking out of the slow suffocation of living paycheck to paycheck, finally stepping into the world he saw every night on his phone, a world of charts and green candles and people claiming they had escaped the 9-to-5, grind through smart plays and leveraging opportunity. He had told his girlfriend that they were going to be fine now, that he had found something bigger than overtime shifts and delivery runs, that he was going to make their money work for them instead of the other way around. Now he stared at the paper on the door and replayed that conversation in his mind with a cold, hollow shame. The mortgage was behind, the emergency savings account was emptied, and the $25,000 online loan he had taken to front-load his future had become a weight dragging every part of his life under at once. He opened his banking app with the kind of dread usually reserved for hospital results, and the screen confirmed everything. A balance so negative. The bank had begun quietly charging him little penalties with every day that passed, automatic repayments, tearing chunks out of his paycheck before it even arrived in his account, bills stacked up like accusations on the kitchen table. 3 months was all it had taken to walk from hope to foreclosure. To understand how Daniel ended up here, with a notice on his door and a life tied in knots by money he never truly held in his hands, you have to go back to the moment when he still believed debt could be a shortcut to freedom instead of a trap that would close around his house. 90 days before that notice appeared on his door, Daniel was just another tired pair of eyes glowing blue in the light of a computer screen at a call center, answering the kind of angry, repetitive calls that grind down your sense of worth, one complaint at a time. By day, he worked customer support for an internet provider, apologizing for problems he did not cause, promising solutions he did not control, reading the same scripted lines until they no longer sounded like sentences to him, just noise. At the end of his shift, when most people were heading home to cook or watch shows or talk to their families, he drove his aging Toyota down dim streets to pick up food delivery orders, trading what was left of his energy for a few extra dollars, trying to stretch his monthly income from something barely enough to something almost enough. His paycheck from the call center covered the mortgage on his modest house, the student loan he still carried from classes he had never finished, the minimum payments on a pair of credit cards that had become his emergency solution for everything from car repairs to dentist visits, and the basic costs of staying alive in a city that seemed to demand more money from him with every passing year. The groceries, the gas, the surprise copay on a doctor's visit, the little gift he wanted to send his mother back in San Antonio. All of it gnawed away at him until most months ended with a tiny sliver of cash left in his account. Some weeks no more than enough for a cheap takeout meal. Each time his phone buzzed with a bank alert, his chest tightened because he never knew if it would be a reminder that a bill was due, a warning that his balance had dipped below some invisible threshold, or just another marketing message pretending there was something he wanted to buy. At night, exhausted and sore, he would collapse on his sagging couch and open YouTube or TikTok, letting the algorithm pour an endless stream of bright, confident faces into his living room, people who spoke fluently about financial freedom, passive income, retiring in their 30s, escaping the 9-to-5, and they all seemed so certain, so calm, as if wealth were simply a matter of knowing the right trick and being brave enough to act. He started to notice how often his own life felt like a loading screen that never finished, always buffering, while other people's lives seemed to play in high definition. His old coworker posting from a vacation in Bali, a former classmate buying a new car, influencers half his age talking about portfolios and cash flow and making money while you sleep. One night, as the ceiling fan hummed above him and the cheap lamp cast a pale circle of light over the unpaid bill on his coffee table, he stared at the cracked glass of his phone and whispered to himself that there had to be a faster way out than this, some path other than working until his body gave out, some door he had not opened yet. He did not know it then, but that quiet sentence, born from exhaustion and humiliation and fear, was the first step toward the loan that would one day cost him his house. The trap did not arrive with a warning label or a villain's theme song. It slipped into Daniel's life, disguised as a familiar face and an offer that seemed to shimmer with possibility, appearing one evening in the form of a TikTok video that autoplayed while he absent-mindedly scrolled through his feed after a long shift. On the screen was Luis, a guy Daniel had known years earlier when they both stacked boxes in a warehouse for barely above minimum wage, the same Luis who used to ask to borrow $20 until payday and share stories about how he was going to move to somewhere better one day. Now Luis stood in front of a sleek black Tesla parked in the driveway of a house that looked bigger and newer than anything Daniel had ever stepped into. He held up his phone, showing a series of screenshots, each one more unreal than the last. Balances jumping by thousands in a matter of days, profits circled in bright colors, captions boasting about turning a small starting amount into six figures. The words at the bottom of the video read, in aggressive text, that if you were still working a normal job in this year, you were doing life wrong, that the world had changed and the real money was in crypto, in leverage, in knowing how to ride the waves the banks did not tell you about. Daniel watched the video twice, then a third time, noticing the designer watch on Luis's wrist, the way his voice sounded heavier now, more confident, like someone who had solved a puzzle that everyone else was still struggling with. At the end of the video, a line flashed up. Send a message with the word ready if you wanted to know how he had turned $5,000 into $150,000 in a few months using safe, automated strategies and a signals group that did all the hard work for. It did not feel like greed when Daniel's thumb hovered over the message box. It felt like survival. He thought about the call he had ignored from his bank that morning, the mortgage payment that was due in less than 2 weeks, the delivery shifts he had been skipping lately because he could not stand the thought of one more night in his car, and the dull ache behind his eyes that never seemed to go away. He told himself he did not want to be rich. He just wanted to stop feeling like a late payment away from disaster, to stop flinching every time his phone buzzed because it might be another bill he was not ready to face. With a mixture of hope and quiet panic, he typed the word ready and hit send. Within minutes, Luis replied with voice notes full of swagger and assurance, talking about low-risk strategies, smart borrowing, and how the real game was played. As Daniel listened, he felt something inside him shift, a sense that maybe, just maybe, he was standing at the doorway of the faster way out he had been whispering about to his cracked phone screen. He did not see a trap with teeth closing. He saw a friend offering him a map out of the maze. Luis's messages came in a steady stream over the next hour, each one layering confidence on top of confidence, until the plan sounded less like a wild gamble and more like a calculated move that serious people made all the time, the kind of thing bankers and hedge fund managers discussed over quiet lunches while everyone else kept punching the clock. He explained that Daniel did not need to wait years to save up a small amount of money to invest, that he could front-load his future by using the tools the system had always reserved for itself. The strategy was presented with simple, clean steps. Apply through a particular online loan app that could approve him for as much as $30,000 within minutes, move that borrowed money into a crypto exchange, split it between a handful of promising coins, and a leveraged trading bot that Luis's group used. Hold the positions for 30 to 45 days as the market moved up, then cash out, pay back the loan, and walk away not just debt-free but ahead, with enough left to clear the worst of his credit cards and stack a real emergency fund. On paper, especially in the screenshots and charts Luis sent to back up his claims, it felt almost responsible, like using the system in a smarter way instead of being endlessly crushed beneath it. When Daniel opened the loan app, Luis recommended, the interface did not look like something dangerous. It was bright, friendly, full of rounded corners and reassuring phrases about flexibility and financial freedom, telling him he was pre-approved for up to $30,000, that the money could land in his account within minutes, that repayments were simple, fixed, and transparent. A bar on the screen slid smoothly as he adjusted the amount he might borrow, and the monthly payment estimates that appeared below did not look impossible, not when compared to the profits he had seen in Luis's screenshots. They looked like numbers a future version of him could handle easily once this run was over and the profits were real. He sat at his kitchen table, thumb hovering above the confirm button, and in that moment the entire weight of his life seemed to hang from a decision that could be made in less than a minute. He thought about the overtime shifts he had been working for years, about the mold stains spreading slowly on the bathroom ceiling that he could not afford to fix properly, about his mother's voice on the phone asking if he was eating well, about the way his chest tightened every time his mortgage payment date approached, as if an invisible hand were squeezing his lungs. He also thought about Luis standing in front of that shiny car, speaking about escape as if it were simple arithmetic. Fear blended with hope until he could not tell which one he was acting from. Finally, with a breath that felt too shallow, he chose the number 25,000 on the slider and tapped the accept button. The app spun for a few seconds, displaying cheerful messages about processing his request. And then, just as promised, a notification popped up from his bank to say that $25,000 had been deposited into his checking account. For a brief, dizzy moment, it felt like life had finally given him a break, like he had unlocked a hidden level in a game he had been losing for years. What Daniel did not understand yet was that what he had really downloaded into his life was not just money, but a schedule of rigid repayments and a set of consequences that would not care whether the trades went well or not. The trap was now fully built. It only needed movement in the wrong direction for the teeth to snap shut. At first, the money trap did exactly what all good traps do. It rewarded movement toward the center, encouraging Daniel to step further in by making the early days look like confirmation that he had finally made the right call, that this was not recklessness but delayed justice, the universe paying him back for all the years he had struggled. He followed Luis's instructions to the letter, creating an account on a crypto exchange he had never heard of before, transferring the freshly borrowed $25,000 into it, splitting the balance between a handful of coins Luis claimed were about to run, and a trading bot that would supposedly handle the complexity of leverage and entries on his behalf. Within the first 48 hours, Daniel watched his balance climb to almost $30,000. The green bars on the chart stretching upward, little percentage gains stacking in the corner of the screen, and every refresh of the app delivering another small spike of adrenaline as the number grew. The feeling was intoxicating. Compared to the slow exhaustion of answering calls and driving deliveries, this felt like magic, a way for numbers to multiply without his body being involved at all. He found himself checking his phone constantly, during breaks, at work, at stoplights, in the bathroom, imagining how it would feel to call the bank and clear his credit cards, to tell his girlfriend that the money pressure was finally easing, to maybe even take a weekend trip somewhere as a reward for surviving the grind. When the balance rose past $32,000, he messaged Luis in excitement, and Luis replied with laughing voice notes saying this was just the beginning, that if they increased the leverage now, they could really make this count, cash out one big run, wipe the mortgage clean, and reset Daniel's entire life in a matter of weeks. Emboldened by temporary success, Daniel agreed without asking the questions he might have asked if the money had been earned slowly. They turned the leverage up, added another volatile coin to the mix, and trusted the algorithm and the so-called signals. Then, like every bubble story that sounds wise only in hindsight, the chart turned. At first, it was just a small red candle on the screen, a down day that Luis brushed off as normal noise. Then another, slightly larger. Then a sudden swift drop as some news hit the market and panic began to ripple outward. In the space of a weekend, Daniel watched his balance slide from more than 32,000 to under 21,000. Then lower still, as liquidation warnings began to flash and the bot attempted to adjust positions in a storm it had not been built to survive. Fees were deducted each time something was shifted, little bites he barely noticed as he stared in disbelief at the shrinking numbers. He tried to sleep and instead lay awake, checking the app every few minutes, feeling sick as each refresh showed a little less. By the time he panicked and attempted to close all positions manually, slippage, spreads, and the simple math of being overextended in a falling market had eaten away most of what remained. His $25,000 loan, which had briefly blossomed into paper profits, now sat as a balance of barely $6,400 on the exchange. The loan app did not send sympathetic messages. It sent a reminder that his first full repayment was due in just a few days, an amount that would be pulled automatically from his bank account whether he was ready or not. His next paycheck arrived, and almost $800 vanished the moment it landed, siphoned away by the auto debit agreement he had signed with a swipe and a tap, leaving him scrambling to cover the mortgage and regular bills. The payment to the bank bounced. A late fee was added. The electricity company called when his missed bill triggered its own automated system. Each of these events felt separate in the moment, but they were all consequences of the same decision, threads of the same trap tightening around him. Over the following weeks, as the crypto market refused to miraculously recover in time to save him, and the loan payments kept arriving precisely on schedule, Daniel discovered a truth that his initial excitement had hidden. Charts can go up and down, bots can win and lose, but debts remain brutally consistent. And that is how, some 90 days after he had first transferred borrowed money into a glowing app and watched it multiply, he found himself staring at a yellow paper on his front door, reading the legal translation of what those numbers now meant for his life. You have 14 days to leave the house you thought you were saving. Standing on the walkway outside his house, with a notice in his hand, Daniel felt like the main character in a story he would never have chosen for himself. But the uncomfortable truth is that his story is not rare. It is a pattern, a blueprint for how modern money traps are built and why they work so well on people who are genuinely trying to escape the grind. And if there is anything useful to pull from his collapse, it is the set of lessons he had to learn the hard way. The first mistake was confusing desperation with opportunity. When you are exhausted, underpaid, and afraid of one unexpected bill destroying your stability, any path that promises speed will glow brighter than it should, and your brain will label it as a lifeline instead of as a risk. That is exactly the moment when you are easiest to sell to because you do not evaluate offers with calm logic. You grab at them like someone drowning grabs at anything within reach, even if it is just foam. The second mistake was using debt to gamble rather than to build. Borrowing can make sense when it is tied to something that produces real, tangible value, like education that increases your earning potential, tools that help you create something people will pay for, or a business that already has customers and a clear path to making enough to pay the money back. When you borrow to speculate on price movements of assets that can swing wildly, you are not investing, you are multiplying the damage any bad outcome can do to you, because you do not just lose your own money, you lose money you owe someone else with interest attached. The third mistake was having no margin of safety. Daniel had no real emergency fund, no savings buffer, no alternative plan if the trades went badly, and no line he had drawn in advance defining how much loss he was willing to tolerate before stepping away. Without those boundaries, he was like a driver flooring the accelerator on a dark highway without knowing where the curves were. When the turn came, he was already going too fast to correct. The fourth mistake was trusting screenshots and stories instead of principles and boring reality. It is easy to fake a trading history, to cherry pick lucky runs, to show only the wins, and because our brains are drawn to narratives where someone transforms their life quickly, we rarely stop to ask whether what we are seeing aligns with how wealth is actually built for most people in the real world, slowly, over years, through consistent work, disciplined saving, simple diversified investing, and avoidance of catastrophic mistakes. The trap in Daniel's case was not just the app or the exchange or Luis's advice. The deeper trap was the belief that one perfect move could repair years of financial stress, that he could compress a decade of slow progress into a month of lucky timing. The uncomfortable message of his story is that there are no shortcuts that do not carry hidden costs, and the price tag is often paid later with interest. If you are listening to this and you recognize some part of yourself in Daniel, the anxious scrolling, the late night whispers about wanting a faster way out, the temptation to turn to loans and leverage and high-risk promises, then consider this your yellow notice on the door before the bank ever prints one. Do not borrow money to chase volatile gains. Do not stake your home or your peace of mind on charts you do not fully understand. And do not confuse other people's highlight reels with instructions for your own life. Boring choices like living a little below your means, building a small emergency fund, paying down high-interest debt, and investing slowly in simple assets you comprehend will never look as dramatic in a 30-second clip. But when you are older and still sleeping peacefully in a house with no notice taped to the door, you will not care that your story was not flashy. This, in the end, is what Money Trap stories exist to show you. Fictional disasters built from very real mistakes so that you can recognize the shape of the trap before you step into it and choose, quietly and deliberately,